Hey investors, it's James Bausch, local broker here in North Central Indiana. Unless you've been living under a rock or you just got into real estate investing, you're probably well aware that we've been in a seller's market for some time. The availability of single-family homes here in Kosciuszko County is down 11% over last year, and the availability of multifamily homes is down 21% over last year. So we're clearly in a seller's market when it comes to the availability of homes. Now let me ask you investors, has that really put a cramp on your investing? Are you struggling to find good deals and make good investments? Well, we've got 4 great tips to help you refocus your strategies here as an investor in North Central Indiana. Our first tip for investing in real estate while in a seller's market is to play the long game. And here's what I mean by that. First of all, you got to know what your goals are. What are your short-term goals, but more importantly, your long-term goals. And you got to take the steps today to help you get there. Now, if you're working on acquisitions and finding the right property, what that means in a seller's market is that you might need to analyze more deals, run more numbers, and make more offers on more properties. It also may mean that you have to get comfortable with offering asking price or even above asking price. And while that's going to be uncomfortable at first, in 20 years when you look back on the acquisition of that property, if you made good decisions, you're not going to regret what you paid for the property. Now, if you're a seller, don't be rash. Because the market's hot and buyers are paying top dollar for properties, don't cut your legs out from under your long-term goals, pull out a bunch of equity when that's going to shortchange yourself and hurt you towards your long-term goals. Our second tip for investing in real estate while in a seller's market is to buy, hold, and wait until the next cycle. Real estate is a market, and just like every other market, there are cycles that happen. But if you're thinking that, you know what, I'm just going to sit on the fence and not going to buy anything until the market tanks, here's a couple problems with that. Number one, we don't know where we are in the cycles. We're always looking back, and that's when we know something has shifted. And so if you're thinking, hey, I'm going to sit on the fence, wait until the market tanks, and then buy, that may not happen for 3 years, okay? And then if you have a 10-year goal, you've just delayed your goal by 3 years. The other problem with that is, especially with multifamily homes, if that's where you're looking to invest, typically the market doesn't just tank. The bottom doesn't just fall out of it. So we saw in like even 2007, 8, and 9, people with portfolios of multifamily homes did really well. So it may be a really bad strategy just to sit on the fence and wait. A better strategy is go ahead and buy now, wait for the whole next cycle to happen. And in the meantime, pay down that mortgage, get good tenants, take great care of those tenants, and just be passive for a while and let everything work out toward your long-term goal. Our third tip for investing in real estate while in a seller's market is to stick to good fundamentals. One of the main fundamentals that's really important to investing wisely in real estate is to find a good marketplace to invest in. You would not believe the number of calls that I get from investors across the country who are analyzing deals and find Warsaw, Indiana, Kosciuszko County on the map. Here's what they're looking for. They're looking for a good local economy. They're looking for population growth. They're looking for good jobs, and they're looking for the cost of housing. They crunch the numbers and they find us and they call us up looking for good investments here. Now, here's the problem. In a seller's market, sometimes investors will start to get tempted and look kind of the outlying areas. But the problem with that is even though the numbers might look good now, if we see a downturn in the economy, those smaller markets are going to get hit first, and you're going to see a pinch on your real estate investments. Our fourth and final tip for investing in real estate while in a seller's market is to prepare for the cycles to come. My first recommendation to you is this. Although right now it's not too hard to find a good tenant in our local marketplace, be prepared for when those things might start to change and it's harder to find those good tenants. What you can do now is place the good tenants, take great care of them so that number one, they stick around with you when the market shifts, and number two, you've got a good reputation with the landlords and tenants in town, and that way you can fill those vacancies a little bit faster. My second recommendation for preparing for different cycles is to acquire cash, acquire capital, build those relationships now that'll be able to fund your deals down the road. When you find the right deal, you can pull the trigger with either your own capital or someone else's capital. And that way, when the market starts to shift, you can jump on those opportunities. That's our fourth tip. If you're like a lot of real estate investors that I know, you've been struggling in the seller's market to find good deals and make good investments. We hope that these 4 tips have been helpful for you on your real estate investing journey. Let us know if you have any other questions and we can be of any help. Again, to recap, those 4 tips are: number 1, play the long-term game. Number 2, buy and hold and wait for the next cycle to happen. Number 3, stick to good fundamentals. And number 4, be preparing right now for the next shift in the next cycle. If you have any questions, feel free to hit me up at 574-551-6051.